Hey, Money Morning Live. Hope everyone's doing well and enjoyed their stay, their time, their short time there with Nick Black and Brandon. Right now, it's time for Power Profit Trades with Tom Gentile. Let's bring him in 5, 4, 3, 2.
Tuesday, May 31st, 2022. If you don't know me, well, you need to spend some more time here in the live trading room because I do things a little differently. You know, one thing that we all do here at Money Morning Live and across my channel at YouTube is we try to bring together top traders, but all of us come from a different area. Some of us are more fundamental. Some of us are more options oriented. Some of us are more stock oriented. I am what you call a pattern trader, okay? I am a pattern trader. I've been a pattern trader for several years now. And one of the patterns I'm going to talk about today is Operation Surge Strike strategy. What that is that's a pattern looking at implied volatility. We're coming off a huge winning streak, huge. Even with the markets, with the kind of quarter we had, with the kind of year-to-date numbers we've had, we've done very, very well. Any of you that are part of the Operation Surge Strike team with us as a member, you know exactly what I'm talking about. If you're not familiar yet, we're going to talk about the inner workings of Brutus today, how we use it, why I love it as an active trader, because guys, the best thing you could have done over the last quarter is get out of the mindset that you think something's going higher or that you think something's going lower, right? One of the less stressful ways to trade this year has been trading implied volatility and scalping. And I'm talking about not picking up nickels and dimes here. We're talking about picking up dollars, right? So that's been one of the best ways to trade. I believe Q2 earnings, which are going to be starting real soon, right? Not that long. We are not that far away from starting Q2. We're getting the stragglers out of Q1 now. Then we're going to start straggling into Q2. Then before you know it, Q2 is going to be here, and it's going to be a feast like it was this time around. So, got a pretty fair amount of stuff to cover today as we are on the final day of May. Before I do, Eric, how you doing? How was your long weekend?
Oh, the long weekend was nice. Holiday weekend. We had a little barbecue yesterday. Some friends over. The kids are in the pool. I'm in New York. The pool was open early. It was freezing, but the kids had a good time. It was a nice long weekend. How about yourself, Tom?
Man, a lot of folks know I was at an undisclosed location recently, but I've been all over the place.
Yeah.
I'm tired. The long weekend, we did a kind of a big get together at the house. My pool felt like bathwater, Eric. And I got a pretty decent sized pool. I mean, it's pretty big, but because Florida has just been, we finally got a dose of rain here. I think the first rain we've seen in the last couple of weeks came yesterday afternoon, and right toward the end of our party. So we ended up taking the party indoors. But wow, bathwater.
Yeah.
It was. Let me just tell you this: I could have used a day off. It could have been great if we had the party at anybody else's house but mine, but that's okay. We had a great time, just like you. The only difference is the water was a little warmer down here than what you were dealing with.
I'd say 20 degrees difference probably in the water. And Tom, you're the one with the cool house now, man. Everyone's going to want to go to the party house.
Yeah. You know what?
That's what it is.
I was going to put the ranch up, and I was going to put the Ethereum ranch. But the way Ethereum prices have been going here over the last couple months, I got to wait before I nail that thing up.
Good idea.
Hey, but you know what? Hey, Bitcoin and Ethereum up 10% since Friday. So that's pretty good, even with the market pulling back a bit as well. So, there's a lot to look at there, when you came into this morning. How did you guys, those of you that are listening, watching us on Monday Morning Live or YouTube, how was your holiday weekend? What were you thinking about over the weekend? Were you thinking about cryptocurrency? Were you thinking about stocks? Were you thinking about, the little bit of a break we have between now and the next Fed meeting? And is this little bounce we had that started last week, is it going to continue? Because, I missed out on everyone last week. So I'm back. Did you miss me?
We missed you, Tom. We missed you.
I'm kind of a product of repeatable things. I like repetition. And so me not being here last week, kind of threw me off a bit. But one of the things that you do, when, with me is I don't get a lot of sleep. I don't know how many of you do. Eric, you got kids. You know exactly what I'm talking about.
Yeah, there's not a lot of sleep time. Even weekends, it's 6 o'clock, 6:30 wake up time with the kids running around. There's no sleeping in anymore.
My kids are all now in their 20s, so I don't have to worry about that kind of stuff. They all sleep in anyway when they're at the house. So that's not it. But cats, we got a couple of kittens. I don't know if you call them kittens after 1 year. After the 1 year old, they're basically cats, and these cats are just a little over one. But we got two of them, and they get up in the morning and they start running around chasing each other, and you can hear them scratching through the house. And I've been trying to figure out over the last couple of weeks how to get these guys to stop. I don't want to put them in timeout, put one in one room and one in the other, just cry. But I figured it out, and I think you can do this with kids as well, Eric.
Right, so, I'm listening.
You know how you're driving along, and your kids won't shut up in the back seat, and you think, you know what I need to do? I need to pull into a McDonald's, give them each a Happy Meal, get them, all amped up on that hamburger, and then about 10 minutes later, boom, they're out.
Love that.
The bodies can't handle that kind of food. Well, I started doing that with cat snacks recently. So, little cat snacks, so you give them one or two. I give them a handful. 6 o'clock in the morning, they're scurrying around. I'm like, it'll wake my wife up. I'm already up. So I run to the cat snacks. I separate. I put some cat snacks over here, cat snacks over there. They eat them. And then literally within minutes, boom.
You're going to be the guy with you're going to have the fat cats.
That's how my day started.
Fat cats, Tom.
So it's a normal day, man. I'm no different than anybody else. We're all trying to figure out patterns, and I'm figuring out patterns on how to keep my cats asleep at least till mid-morning. All right. 9:30 a.m., however, different kind of patterns. So let's go ahead and start with the markets. I haven't been here in a couple of weeks. We're going to look at patterns, and what I want to do is I want to look at surge strike patterns. So I'm going to be looking at two things. I actually got the charts up right now, and I've actually got three things up here. But the two most important are, a price, which I can tell you right now, starting on the high side, we've gone to lower highs and lower lows. We just came off a lower low last week, right? If you kind of back up here, you can see, was it last Monday? We hit a new low in the S&P. Tuesday, Wednesday, Thursday, Friday. Yep. And then the bounce. Then we kind of sat for a little bit. And then Thursday, Friday, we had that big up move Thursday afternoon. Friday had a gap. Today, we're on a run as well. Excuse me. Let's get to that latest chart. I don't know what I'm doing looking at the 27th. That's what I'm looking for. Yeah, Friday, we had the gap up. And then today, we're pulling back a little bit. We're well off the lows. All right. But as surge strike members, what do we look at? We look at price, but we look at volatility, and we're looking for patterns within that. So if you look at the overall S&P, which I'm looking at right now, I got a price that's going down. We are hitting resistance right now. However, I think we're going to get above this resistance, Eric. I think we're going to be shooting for the 425, 430 area here over the next week, right? I believe that this little love fest with the market, everybody said it started last week, and it did. It started the middle of last week. It really didn't get started until Thursday and Friday. But can we continue? Okay. Patterns tell us, folks, that those few days after Memorial Day, we tend to see the markets move higher. Patterns tell us that the last 2 days of every month and the first 2 to 3 days of the following month tend to move higher. Where are we going? We're in the last 2 days right now, okay? We're in the last day. The second to last day was Friday. So we have our last day, which is today. We've got the next 3 days, which take us to June 3rd. I am pointing at an up week in the market. I believe you're going to see this market move higher. I do think we're going to gravitate out to around 425, 430 on SPY. And then next week, we'll talk about next week, but that's where we go back to, let's talk about the Fed again. We'll get to that next week. But that's what we're seeing. The one area that's kind of bothering me about the move that I'm expecting to see higher is we got a little bit of a bounce in volatility here. You see that in a little up run there in volatility. And so vol's been on the high side, high vol, low stock price, high vol, low stock price. Now we're starting to kind of jump back up a little bit. Are we setting up for another move down? I believe we are, but I don't think it's going to happen this week. All right, so that's the S&P. Let's take a look at the Qs. So I want to take a look and see what QQQ is doing. Let's pop over and look at the Qs. And here's the Qs. Not much of a difference here. And what I want to do is I want to take us back. I got 180 days on the chart. I want to take us back 150 days. That just widens us out a little bit more. Yeah, that puts me where I want to be. Even 130. I want to take us to year-to-date numbers so you can see what I see. This is good right here, right in this area here. So again, S&P, let's move to the Qs. And you can see the Qs even had that move down, a little bit of a rally, move down, getting a little bit of a rally right now. Where are the Qs coming in at? Well, we know when the Qs were high, that volatility on the QQQ was low, right? Same thing's kind of happening as we got higher vol, lower Qs, higher vol, lower Qs. Vol's dropped a little bit. We get a little bit of a bounce today. That's because of what's upcoming, and also the start of the day was a little bit of a scary one. But we've had a couple of days rally. Where is the Qs? Where is the action, the resistance on the Qs? 320 to 330 is what I got. And I really think we'll probably come up around this 50-day moving average, which is coinciding with what I like to call stock chart peak resistance. That is just south of 330. Right now we're at 307. That's a 10% move, Eric, from where we are. Well, not 10%. Let's call it about 7% move. That's a 7% move where we are right now.
Nice move either way.
Listen, there are some pretty interesting risk-reward ratios right now, looking at weekly options on SPY and on the Qs. But I wouldn't go run right out there and start buying call options. They're expensive. I mean, when you look at, for instance, look at the Qs, you can see the low was 2A. The low was on the vol was 16, and the high was above 40. And where we're at right now is a mid-30s. So, this thing is probably regularly priced, I would say, in the high 20s. So it's still a bit expensive. Call spreads make the most sense to me. Those close to the money call spreads, I call them one-to-ones. You risk $1 to make $1, give yourself a high probability trade. You could do that all day long this week in the Qs and the spiders. The liquidity is there, folks. All right, so that's the first two. IWM, okay, that's the Russell 2000. IWM, and as you can see here, same thing. Lower highs, lower lows. And the volatility surrounding IWM. The lows were down here in the teens. The highs, close to 40. Where are we right now? Low 30s. Expensive as well. For IWM, for those of you that follow the Russell, right now it's 185, and I'm seeing some pretty big time resistance coming in. I'm going to call it 192. So about 7 points higher from where we are right now. Let's continue on this journey, Eric, and we're going to talk about bonds, which, right here, this has been the trend. The trend has been down, and anybody that has sold any bit of a rally here in the bond market has made the right choice as the bond market. And this is really what's kind of spooking the equity markets right now, is you got bonds that were trading as close as to 120 on Friday. And here we are today at 116.47, coming right back down to those lows. I got to tell you, if you were a trend trader trading puts on the bonds on TLT, trading put spreads on TLT with the anticipation of these Fed hikes has been the way to go with this ETF. Again, you can do the one-to-ones here. Again, the volatility on these markets high. So you're looking at put spreads where you're buying a higher strike put, selling a lower strike put, and you're taking the higher probability trade. Okay, the higher probability trade is there. And you could look at this one, these, I'm looking out even as far as mid-June because, again, I want to put myself out past the Fed meeting, right? Not this week. Earliest would be next week's expiration. That's the kind of things I look at when I'm looking at these ETFs. All right. Cash markets, hey, we needed a pullback. I mean, cash was getting out of control. UUP was above 28 for all of a day. And then we're right back down to around 27, 23. That's not that much of a move back. But, I mean, when you look at it, we've come right back down to around the 50-day moving average. We have a support level down below 26.80. We need to come down another 40 to 50 cents on UUP before we hit that number, right? I'm not going to spend a lot of time on this one, but, bonds went up, cash went down. Cash is up a little bit today. But this is not cash. I'm not looking at the U.S. dollar versus equity markets. I'm looking at the U.S. dollar versus foreign currencies, all right? Oil, what did I tell you? Eric, what did I say about oil? I said we were coming back up and we were going to hit that 85.
It looks like it's going back up, Tom.
And we are at there. We're 86.65 as of this chart. We're there. This, with everything that I see, we're blowing past this. I mean, you got 90, you got 100, USO at 100. That's insane. When you go look and see where USO was back May 2020, 2 years ago, you could not give oil away. The futures contracts were negative. I believe it was a negative $25 a barrel for the May contract. And that was insane. And really what was happening is there was a shakeout to people that were long those futures contracts. People went broke buying futures contracts in May at $5 a barrel, only to have to get out of their position at a negative 25. That's a $30 loss on something you can't even fathom what in the hell just happened, right? But what it did was it forced USO down to some ridiculous levels. Now, here we go 2 years later, oil's back above $110 a barrel. Gas is at new all-time highs. Now you got to pay a surcharge when you're on Royal Caribbean. I never thought in my wildest dreams those surcharges above $65 a barrel would be back. But they came back months ago. And now they're really in force. And that surcharge, if you've never been on a cruise. All right, so cruises, they'll hit you up. Hey, you can go on this 1 week cruise for the low price of $1,000 a person. And then when you start looking at the fine print, you see that they're going to charge you and your the person next to you an extra $100 a day as a surcharge, or $20 a day as a surcharge. They call it a fuel surcharge. So all of a sudden, if you're getting charged, let's say $50 a day on a fuel surcharge, 7 days, figure it out, folks, times 2. I mean, you're talking about $700 for a couple on a cruise that might have cost you each $1,000. That's a pretty expensive, going from $2,000 to $2,700. Big deal. Well, it's there, and it's there to stay for who knows how long. I think it's going to be there for a long time. Trend is up in USO, trend is up in oil, energies, etc. We've had pullbacks, but this thing's staying well above the 50-day moving average as we're moving along here. All right, let's take a look at my favorite, who knows where the hell it's going, GLD. And GLD, this one's really interesting because you had this just big surge in GLD as we got into the beginning of March. And then just as fast as it went up, it came right back down. It created a baseline here at around, I'm going to call it 176. Going once, going twice, going 3 times, gone. So what does 176 represent to me? 176 represents resistance. That's the number for any of you gold bugs who are long gold. And I don't mean long, but long for a long time. Where's the number where we start to get a little bit of light? 176. Any close above 176, and we're closing above that double line resistance area. But that's where we are right now. I will say this. Options on GLD. Well, they're nearly as cheap as they've been on this chart. If you see, they've gone down to about a 13. They've gone as high as a 34. Look where the IV is, all right? This red line, for those of you who are new with us, if you're on YouTube or if you're with me on Monday Morning Live, this red line represents how cheap or expensive options have been relative to the time on the chart. So you can see over here, they were very cheap back in December, January, February. Then they got expensive in March. They came right back down. And here we are. We're down on the cheap side again as we head into June. That's GLD. All right. How about the VIX? Well, the VIX, as I told you, was in a bit of a rut. For the longest time, we traded between 24 and 28. Well, guess what happened last week? Last week on the rise, all right, on the bounce in the markets, we dropped back down. And here we are now down in the low 20s. We have not seen these levels. You got to go back to February. You got to go back to winter time, all right, before you see the lows in VXX that we're seeing right now. So, if you take a look at all the key levels we've discussed, all right, and let's just review them for a moment. Stocks, Qs, spiders, IWM. Okay, downtrend. We're in a current long-term year-to-date downtrend, but we are looking at bounces right now. And if you look at the significant piece of information that's coming out next week, that could be where the bounce ends. I think the markets are ahead of that. So I believe we'll probably bounce up into this week, and then next week's going to be a whole new ballgame. Bonds trend is down. The trend looks down regardless of what the stock market does. Currencies, we're getting a pullback in UUP. Look for some more resistance as the U.S. dollar buoys against foreign currencies. And then you got commodities like GLD, which is the mystery commodity right now. Got to get above 176 to be back in the bullish camp. And oil, we've been saying it all year long, guys. This is something you want to own to the upside. Okay. Before I move into, I got a couple other categories I want to get into before we start talking Surge Strike, Eric. And so a couple things I want to point out. Number one, Top Gun. So Top Gun, the Top Gun Maverick came out this weekend. I haven't seen it. I want to go see it. I loved the first movie that came out in 1986 when I was a mere 21 years old, and really loved it then. And I just thought it was unbelievable on the screen back then. I hear a lot of folks that say, oh yeah, I didn't like Top Gun 1. Please take yourself back to 1986 and look at the kind of technology we had then compared to where we are now. I'm excited to see this movie. It looks very patriotic. I can see exactly why they released it Memorial Day weekend. And this guy's been an actor for 40 years. 40 years. Guess what? I've been trading now, Eric, for 40 years.
That's a long time.
You know that.
And you're still not bored of it, Tom. It's still what you love doing every day.
I started trading in 1986, literally when the Top Gun movie came out. So you got one Tom who's an actor for 40 years. You got one Tom who's a trader for 40 years. I just thought I'd bring up that analogy. I thought it was kind of cool.
I like that.
But here's where I was going. So if we take a look at AMC for a moment, because some of you got to be thinking, oh, Top Gun, $150 million opening weekend, biggest weekend of Tom Cruise's life, of his career. And yeah, we got a little bit of a bounce. And I think there was some anticipation because if you look over here, let's take a look at the low. Was it 10? All right. Who called that? But we double bounced above 10. And then here's Wednesday, Thursday, Friday. And all of a sudden we jumped all the way up to where we opened at 16. And the apes were probably all over this one. They weren't thinking about it in the middle of the week, but they were thinking about it at the end of the week when they saw this move. They were like, oh boy, Top Gun, this is it. AMC's going back to all-time highs. No, it's not. This is a sellable moment, folks. I don't care how good this movie is. They could do a billion and a half at the box office, and it's not going to make AMC get back above 30. It's not going to make AMC get above 70. Get your patterns straight. What do? We buy the rumor, we sell the news. Somebody's already selling the news right here. As we went from 16 down to what is that? 14? 14. And where are we at right now? $14.71. That's the pattern that we're seeing right now. Okay? So, you know what? Be goose. All right? Watch the pattern trader, sit and navigate with me, and I'll show you the patterns, and I'll show you where the patterns are. So that's AMC. I thought I'd throw that up there real quick. Here's one more thing I want to show everybody. Let's take another, again, 40,000 foot view out of our F18. And what we're going to do is let's look at stock charts for a moment. And I want to look at actually cryptocurrencies. What's going on with crypto? So crypto kind of derailed last week. It derailed to the downside while we saw the bounce in the markets. And I find it very interesting that I saw Bitcoin up 10% since Friday with the markets going down. Bitcoin was hitting new highs, 31,796. This is a 24-hour snapshot. So still up nearly 4% in the last 24 hours. Year to date, 7 days, up 7.91%. All right, it was an interesting one. Ethereum. Now, Ethereum was much higher earlier in the week. So that's why you're only seeing a 0.28% 7-day rise. But we're up 3% today, and we're back up around that, close to that $2,000 move. I just thought I'd share that with everybody for a moment. One more thing I want to look at. I want to look at year-to-date highs and lows because I want to put everything into perspective for you. So if we look at the high-low ranker, right now I run the high-low ranker. I ran it for the last 20 weeks because that's how many weeks we've moved into this new year. All right, even though I shouldn't call it new year, but for 2022, we've traded roughly 20 weeks of the, 20, let's call it 20, 25 weeks. So since the beginning of the year, if you see ConocoPhillips up here at the top, that means the high price, 111.20, the low price, 78.49, and the close price, this was Friday's price, 111.20. That means it's sitting on its year-to-date high. Guess what else is sitting on its year-to-date high? Marathon, Chevron, Phillips, NRG. Wow, AT&T's kind of an outlier there, isn't it? Because everything else ahead of it was energy. Let's see what else we got. Contura Energy, Cerner Energy, EOG Energy, ExxonMobil Energy, Apache Energy, Hess Energy, Pioneer Energy, Marathon Energy, Schlumberger Energy. Schlumberger is at 99% of its high. But what I'm saying, folks, is that your top 14 stocks, 13 of the top 14 stocks are energy, all sitting on their year-to-date highs. If I continue, energy, Rollins, I'm not sure if they're energy or not, but here's Merck, 95%. That means when you take a look at the year-to-date and you look at where it was, it's low for the year and it's high for the year, and where it is now, it's up in that top 5%. It's at 95% of its low to high range. Now, I say that because I like to look at what's called top 10, bottom 10. Top 10%, bottom 10%. Let's just take a look at that real quick. Top 10%, what we're looking at here, folks, is I'm going to look for a number that ends in 90 or above. So here we go. I didn't have to go very far, did I? Northrop Grumman. So 33 stocks that represent the S&P 500 are trading in their top 10% of they're in their 10% highs year to date. Now, I'm going to take this list and I'm going to rerun it for stocks with latest lowest close for week show. This basically means, let me see what the bottom numbers are. Now, I'm going to look at the top 10% of the worst. So these are the worst. Look what number one is, Eric. Can you believe it?
Alphabet.
I mean, even with the run we had, I got to look at the chart on this one because, I get ideas even live. So Google with an L, and look at this. I mean, it's popped a little bit, but we're talking about a high-low ranker that is, let me update the high-low ranker real quick. And I'm going to rerun this for stocks lowest close. That might change it up a little bit here, and it did. But I mean, check this out. Now I'm looking for 90 percenters. Property down, Pentair. That's pools. If you live in Florida, Pentair, you probably have that on your pool. Medtronic is in here. Robert Half. You got all kinds of jams, Smuckers down here too. But I mean, look at the bottom 10%. So here's your bottom 10%. The top 25, Rockwell, Etsy, Charles River, Eaton, Ford Motor Company's on this list. PayPal's on this list. Salesforce is on this list. Netflix, Smucker Peanut Butter. All right. I mean, there's some names that are off by 90% for just this year. I'm not even factoring in the November highs that we had in the market. Now, I bring that to you because there's some things we can do with these patterns, these price patterns. And one of the simplest things we can do is, I've always been told for the longest time, if you go back and you read Reminiscence of a Stock Operator, okay, this was a book written by Edwin Levine about the great trader Jesse Livermore, who says a stock is never too high to buy and a stock is never too low to sell. And so you can look at top 10 highs and top 10 lows and create strategies off of that. Tomorrow, I'm going to show you exactly how we do that and how we utilize that as part of our quantum data profits research. Okay. So I wanted to leave that there with everybody. Now let's talk about trigger events. You guys already know that you heard us talking about it. We've been talking about performance on this last quarter. It's actually done really well. Okay. How many of you watching me right now are Surge Strike members? You're a member of Operation Surge Strike. Did you or did you not have a good quarter this quarter? All right. Since April, that's our, January, February, March, first quarter, April, May, June. So we're in the back, the back nine of the second quarter. Did we or did we not so far have a fantastic Q2? Did we or did we not outperform literally everything else out there? Because I know we did. But, let me get real with you guys for a minute. We're not beating the market. We're not beating everybody else. What we're beating, we're not only beating the market. We're not only beating everybody else, but we're beating volatility. So, Eric, I want you to put those numbers up, those 3-month returns.
Of course.
When you look at Operation Surge Strike versus some benchmarks.
Sure. Here we go. And I'll take everyone through it. Our 3-month returns, we have positive. This is green, 56.4% Operation Surge Strike. That's what we're getting out of OSS. Then we have in the red, negative 7.4% from the S&P 500 index and a negative 10.4% by the VIX Volatility Index. And we have this is all between the 225 open through the 525 close, Tom.
Yeah, and the thing I want to make sure everybody understands is that included a March, March was a tough month. It was a tough month because we had the markets just gyrating back and forth, and we had volatility was dropping. And so, there you go. I put that out to everybody just to kind of give you an idea of what we're doing. Numbers don't lie. I mean, 17 trades was where we hit the win streak. I really thought we were going to hit, we were going for that 21, that Oakland A's number. But you know what? That's okay. 95%, pretty darn good. So I feel pretty good about that one, Eric.
As you should.
When's the last time you had 17 winners in a row?
I don't get that many wins in a row in life, man. So you should be feeling good about that.
It was I want to say it was an outlier, but you know what, folks? Whether you call it an outlier or whether you call it luck, some of you saying, "Oh, Tom, you were just lucky." You could flip a coin. If you it was like having a two-headed coin. The thing is that in good times and in bad, it's about trading the system. Okay, it's about trading the system, folks. Year to date, Surge Strike is up double digits. Quarter to date, even more so. And so, that's the thing, is it's all about trading that pattern. It's about spotting that opportunity, all right, and then creating that acceptable risk trade. Some of our acceptable risk trades with Surge Strike are small dollar amounts, and some of them are a bit expensive. And before we're done today, I want to talk about stop losses. I want to show you how we take a stop loss on a membership like Operation Surge Strike, because again, it's not just about capturing winners; it's about what to do with the losers. So it's capital preservation. But you know what? When we get in, we get into capital preservation, Eric. I want to talk about the loser. One of the losers we had, and it was I mean, we'll bring up a loser. We'll bring up a very recent loser here in a minute. Before I get into that, you guys have heard the saying, "Don't trade with money you can't afford to lose." And there are some alerts that we put out that are not cheap. They're expensive. I'd love to sit here and say every single recommendation, every single trade we do is going to be less than $500. But with volatility as high as it is, that can't always be true. All right. We look for those. But if I find something that the team and I feel has exceptional patterns and has had an exceptional reward, going back in time, looking at history, which is what we do. That's what we do as pattern traders. If it's a little more expensive, do I A, just chuck it out and not give you anything that week? Or B, do I put it out there because there are some people that do want to trade that? I'm going to go with option B, right? But when it comes to capital preservation, that's something that you have to have a conversation with yourself about. And depending on the kind of options you're buying, yeah, it can get kind of expensive. But you know what? What we don't want to do in anything that we're doing, whether it's Surge Strike, whether it's Rocket Wealth, whether it's Quantum Data Profits, which is our newest alert service, cryptocurrency, what we don't want to have is we don't want to have these all burn to zero, okay? And, that's for when you don't have one of these 95% win rate streaks going on. I look across all of our pubs, and all the stuff that we do, Eric. And so, you look at closed trades, and I mean, we're hitting pretty good across the board. We're hitting good. We're hitting good. I mean, even microcurrency trader, our closed positions there, we're positive on that. You look at the last year have been fantastic. Yeah, we got some open positions that are underwater on microcurrency trader, but our closed positions, we've been following the rules and we've been getting paid. But, you take a look at QDP, all right? QDP, what did we do? Go 7 for 7 before we took our first loss. Not bad. Coming out of the gate, trading price, right? You take a look at Rocket Wealth. We've had one loser this entire year. We're in that mid 90% for the year with Rocket Wealth. And that's from January to now. And then you've got what we're talking about today. All right. What are we talking about today? We're talking about Operation Surge Strike. But losses are going to happen. Eric, you got an image. Let's bring up that CrowdStrike trade that we put out.
I'll take everyone through it right here because everything can't be a winner. I love the honesty and I love how you're also, highlighting one of the losses that came through. So let's actually read through the alert that came to everyone's inbox. For the first time in a long time, we've gotten an Operation Surge Strike trade that won't result in a profit. In fact, this is the first time in the last 18 trades that we've closed that will be in the red, and I'd take that kind of track record any day. I agree. 18 wins and then 1 loss, that's not so bad. While I'd love to keep the streak going, I'm not going to let my ego get in the way of a good trade management. History did not repeat itself as CrowdStrike instead rose along with the bouncing markets. Our put option is in stop loss territory and it's time to preserve capital. And then everyone was given what they should do, their directions, which is the action to take was to sell the close, the crowd, June 3rd, 2022, $138 put at a limit price of $3. So why would we cut this one loose, Tom?
Yeah, well, I mean, that was a loser. Can't get around the losses when they're there. I think you cannot hide from the losers. You have to embrace them, and the reason you have to embrace them is because you learn from them. Okay, I learn from just as much as anybody. But you know, the original trade was around $11.75 a contract. So we had this going out for 3. So we're talking about about an $8.75 loss. That's an $875 loss. Hey, you know what? It's going to happen sometimes, folks. Okay. I'm not going to sit here and tell you that we're just going to come up smelling roses on every single trade. Right. But I got to share something with you, and I will in a moment. But, think about this. If you traded 2 contracts here, you're in for about $23.50 a contract for 2 contracts. If you're a smaller account, probably skip this altogether. Or if you went in on that $11.75, that's $1,175. I mean, either way, you're dropping off a good 800. That's a good 800. Around $800 per contract loss. I see that. Okay, that's gonna happen sometimes, folks. And so, for those of you that do trade the higher dollars, I hope, because I look at we look at wins a couple of different ways. Let me show you something. We typically show at 1 o'clock to our Operation Surge Strike folks. I'm going to show it to everybody real quick. All right. So here is the closed recommendations for Q2, which I have all teed up for 1 o'clock. And so you can see here, we started out April with LMT, we got FAST, blah, 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 all the way down to, there's the CrowdStrike loss. Yeah. Now this shows 84% loss. But when you take that and you factor in win after win after win after win after win. Okay, so what this average right here is what's called an unweighted return. All right. Does anybody in the room understand what an unweighted return is? Okay. Jeff K lost 1,600 on crowd, but it was noise after all the other wins. The quarter was over 11,000. Jeff, I'm going to hold your comment for a moment. Can we tag that, Eric?
I'll grab that one for you.
This comment.
I'll grab it for you.
I always see these comments that are tagged at the top of the screen, and they're all these great yay. This is a good one. This is
got it.
Perfect. Thank you, because I want to come back to that for a minute. Because $1,600 is not. I mean, that's a good chunk of change. If I saw $1,600 blowing down the highway, I'm going to pull over and go get it. But the thing is that we look at that, and Jeff says, otherwise, all the other wins for the quarter, well over $11,000, need to take the bad with the good. Now, Jeff, I'm going to ask you a question real quick, okay? And I'd like you to answer it as quick as you can so I can see you come up on the screen between everybody else. But are you doing, for instance, 1 contract per trade or 2 contracts per trade or 3 contracts per trade? Or are you doing it based on the amount of money that you're putting at risk? So if you're doing a straight $500 or $1,000 per risk, okay, you're doing 2 contracts a trade. So what Jeff's doing is he's doing what's called unweighted trading. Unweighted trading, folks, I got to tell you, once you get familiar with a strategy, then you're going to want to start to weight your strategy. That means that you'll do $1,000 a strategy, and that means you're going to have more contracts of one type of trade than you will in another. You're smoothing that out. So when you look at something like, let me find one that would make a lot of sense. There it is. Look at PayPal. Okay, so let me light up PayPal for a moment. So here's the one that came up and did 250%. So if you only did 1 contract on that, that was a $5.90 option that became $20.65. However, if you went and risked, let's say, 3 of those contracts for every one of the, here it is down here, CrowdStrike, and you tried to, get that, or let's say 2 to 1. Let's say you did 2 because it went off at 1060. you know, 1060 was one, but then you look at PayPal and you say, all right, well, with the PayPal trade, I can do two of those because that's only $5. That's where you're going in and you are weighting by dollar cost. Your dollar cost averaging, trying to make your trade the same dollar amount. That's going to make that number, when you look at all these winners here, that's going to make these numbers look much, much better on the bottom line. It's called weighting. It's actually, I like to call it weighting your contract, not unweighting. All right. So that's it. For those of you that your very first trade happened to be the loser, hey, you know, it's going to happen. Let me just take you through some of these here. I'm actually going to get past the trades that are the losers. All right, let's go all the way to the top. Let's just start with the losers. So somebody started in here with FAST as their first trade, and they went loser, and they went, okay, now I got a winner on USB, but then I got a slight loser on Nikola. Then Halliburton was a winner. Then PLD was a loser. But then after that, winner, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 before CrowdStrike took a lot of that, took the last winner we had away. So when you get an 84% loser like this one, and you know, I'm going to tell you, very few of our surge strike trades drop that much. But when you get a loser like that, you know, and you say to yourself, well, wow, you know, 1060 became $1.68. Then if you have 1060 invested in something else that doubles in value, and you have 1060 invested in something else that has 65% return, you have 1060 in something else that returns 250%, doesn't look that bad. But even on the unweighted side came out very, very well. We're going to get into this kind of stuff in more detail straight up 1 o'clock. But I wanted to bring this up with everybody for a little bit of time just to show you an unweighted, what happens through a quarter when you're unweighted versus what happens through a quarter when you're completely weighted. All right. Now, another thing I want to share with everybody, stop losses. How do you put these in ahead of time if you want to put stop losses in ahead of time for your broker? All right, so CrowdStrike. You know, could we have put a 50% stop loss in on CrowdStrike? Yeah, we could have. And yeah, you know what? We're looking back on every single one of our directional losers on Operation Surge Strike to see whether that might be the right choice going forward, because if that's the right choice going forward, then we would have been out of CrowdStrike around $5 roughly. All right. So that's what we see. Okay. Now, hard to trade bear markets. No, Batman. It's actually easy to trade bear markets. In fact, most of the winners that we had this quarter were in straddles, which is I like to call it a bullish market, or it was moves to the downside, where if you had your order in ahead of time, you were in, you were out, and then you were on the sideline waiting for the next trade. So there you go. Now, we can get out of different particular, with stop losses, you want to be getting out either on what's called a stop order. Okay, a stop order, when I have a stop order and I'm trying to get out of a trade, like CrowdStrike, for instance, when I have a stop order, if it goes down to a certain amount, like if I get into something for 10 and I decide, look, I'm gonna risk 5 and no more than 5. I want to get out at $5. You put that $5 in right there, and then you can make that a good till canceled. And all of a sudden, now if CrowdStrike, if your option trades down to 5, it'll immediately execute a market order. Doesn't mean you're going to get out at 5. It just means that if this option hits $5, then it's hit my stop. I want to get out at the next best possible price. That's one way to do it. Another way you could do it is by going in and doing something called stop limit, where once you hit the stop of 5, you could put a limit in, and your limit can be 5, or maybe your limit can be, you know what, I don't want it to go below $4.75. If we hit 5, I'm willing to pay to get out for $4.75, but nothing less than that. And that's what's called a stop limit order. And then you can also do, depending on your broker, you can do what's called advanced orders. An advanced order might look like this. All right. Now, if we're looking at CrowdStrike, let's go back to the charts for a moment. Let me type in CRWD. Let's look at CrowdStrike. Here's what happened to CrowdStrike. This is how it went against us, folks. I mean, this thing went up 20 points in 2 days. Within 48 hours, we went from 140 to 160, over 160, 140 to near 170. I mean, who does that? That does, it's a rarity, but it happened. Okay, so it happened. Now, what we want to look at here is we want to look at what if we're in this area here and we say, hey, if he goes above $158, I want to get out of this thing. You can create advanced orders with certain brokers where if I come over and create an advanced order, maybe my order is going to be a market order. Okay, and remember, a market order is to get out of something at the best possible price, right? So market order, all right? Hang with me here, all right? Hang with me here, Teddy. Hang here with me here, Joe, okay? But this is another way you could do stops. You can do a stop which is contingent on price, okay? So contingent on price basically looks like this. Let's say that if CrowdStrike, you put in the trade and you say, hey, look, if this thing goes above $160 a share, if it increases to $160 a share anytime in the future, I want to set this trigger, boom, where now it's contingent upon, I'm going to get out. I'm going to get out of my trade, but only if the stock goes against me by a certain amount, okay? It is called a stop on stock order. That's what I like to call it. But it's also called contingent on price. Okay? Batman, we love you too. It's either he's talking to me or he might be talking about Teddy in Seattle. What do you think, Eric?
You never can tell with the chat. You just got to go with it. Stay positive with everything,
I don't know who's talking about who, but yeah. So again, I wanted to cover the latest loss that we had that was on Operation Surge Strike. I mean, 17 wins in a row, and then we hit a loss, and we hit a big one. So what we do is we go back. At Brutus now, Brutus is fantastic at finding the setups. Brutus is fantastic at finding those entry dates and those exit dates. And if you don't believe me, before that loss we had, the last 17 trades in a row there should make believers out of anyone. All right, but we are constantly, that's Mike, myself, the team, we are constantly trying to find ways to cut the losses down even more without killing the profits. That's the $1 million question. How do you get rid of the most risk you can without killing the profits? Okay. And one thing we're looking into with Operation Surge Strike is stops ahead of time. We just don't want traders to gun us for those stops. We don't want them to come out there and gun us. Okay. So you remember that the Patriots also went 17-0 before their first loss once. Then you're absolutely right. Thank you for reminding me of that. So there you go, guys. I mean, we've looked at a lot here today, but I really wanted to focus on losses today. I wanted to focus on loss orders, how to put in, limit order, stop orders in these advanced stop on stock orders. And so, we got a few minutes left over. Can we find some good opportunities in Surge Strike with Brutus? Well, I wonder if we can. Eric, I'm going to turn it over to you. Let's take 3 minutes.
Yes.
And let's bring up as many charts as we can to see if there's anything coming up that Brutus might be seeing.
Okay, Tom. I had a question prepared, but you know what? I'm going to go in this instead and say Asan, ASAN. Someone was looking for information on Asan right now. Is that something we can check out in Brutus?
Asan is an open position that we have right now with Surge Strike, and we're still in the middle of that one. At 1 o'clock, we're going to talk about that one. All right, so that one we're going to leave to our members. Come on back at 1 o'clock. We'll get into Asan and exactly what the plan is with it.
All right. Next, how about I love that. Next, CVE.
Say it again.
CVE.
CVE.
Correct.
Okay. CVE. Now, Canovus Energy, and this one's had earnings on already. But look at this. I mean, this right here ought to tell you don't trade through earnings, because this one had an earnings miss, and it had the earnings miss when it was at $17 a share. It's at $23.69 right now. But you can see the vol went up, then earnings came out, the vols crashed down. Right now, the volatility is coming off its lows for the year. So, I mean, trend is up. You know, this is one where options are relatively priced right now for those that want to buy it. All right, next chart.
SPX, Tom.
SPX, we did that one already. Oh, wait. I'm thinking of the big S&P options. You're thinking about SPX Industries. No, SPX is the S&P 500. Same as the SPY, all right? Looking for a bounce? I'm looking for a bounce into June 3rd. I like call options. I like call spreads on this even more. Next.
All right, how about APA, Tom?
APA coming at you. That's Apache. That's an oil, and that's going to be an up. And you can see it's gone up. Earnings, they had an earnings miss. They had a bit of a pullback here, but they've broken out. They've actually broken out into new highs last week. You know, I mean, we're getting a little bit of a pullback here, but hey, if I believe the overall market's going to go up, you know what's pushing the overall market right now, Eric?
What's
energy stocks. Energies and energy stocks, and so I like this one even into the end of the week. I like this into the end and into July, because of an entirely different pattern that we look at in July. Okay?
Why don't you take a look at PayPal, Tom?
PYPL, that was on our one of the crappiest stocks in the S&P 500. You can see why. $200 coming into the end of last year, all the way down to, what was this, in the 70s recently? Stocks at 86.30 right now. I mean, it's got some resistance. It looks like around 95. That was the top that happened shortly after its earnings announcement. It pulled down. I mean, you know, when does this become a value trade? You might want to ask Garrett on that one. He's the value expert here, not me. I do kind of like this one long term, but as a trader, I would say if this thing gets up to its resistance, which is around the 95 area, I'd be looking for sell setups right now. All right. And those of you guys that are hanging out over at YouTube here, welcome to the program. You know, most of our YouTubers are now with us over at Monday Morning Live, but those of you that are still over YouTube, glad to have you over here. And Karen, thank you so much. Missed you too. And also, guys, I mean, you know, take a look and see, you know, if you look through, you know, everything here that we talk about, you know, if you're on YouTube, you know, we got hundreds of videos you can check out. So if you're here for the very first time, welcome. Check us out. See what you know. I think you'll find us a refreshing change from the apes, who are all about emotion and absolutely nothing when it comes to rules-based trading. Eric, I think our time is up for today, my man.
I think it is. I think it's time that we take it back to the Surge Strike room with a little half-hour break in between, and maybe some people will decide to join us.
Absolutely, guys. Have a good rest of your day. Garrett Baldwin's up next, and I'll see you same time tomorrow. Bye, everyone.